Hello, and welcome to the Be Formless Flow Driven CEO and VC podcast, where we are reshaping life, leadership, business, and investing. And today I am welcoming all the way from Florida, John Frankel. Welcome to the show, John.
Thank you.
Thank you. What is it sunny in Florida? I forgot to ask you that before.
Well, the weather and the people, great people here.
Yeah, I'd love to get there. It sounds like such a great place. You said that you you base yourself most of the time in Florida. You also have your office in New York, which you go to New York a lot as well. And then you've obviously got an office in Warsaw also.
Right. I mean, simply post-pandemic, everything's on Zoom. So you might as well have, a good weather backdrop whilst
Yeah,
you're on Zoom.
yeah,
And so
totally.
I bounce between two. I'm in New York once or twice a month.
Yeah, nice, 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 nice. Well, let's get on into it, John, because I am really looking forward to, let's just say, the advice you wanted to talk around in terms of giving to, people in their is you have quite the story, quite the business story, quite the career. You're the founding partner of FF Venture Capital. And like I said, you have offices in New York and Warsaw. And it's FF Venture Capital, or FFVC, is an early stage venture firm investing globally across physical AI and early stage technologies. I will get you to explain that in more detail for the listeners as well in terms of the physical AI and early stage technologies. You've got a career that spans both Wall Street and venture capital. And you bring a disciplined, long horizon approach to investing, focusing not just on the market opportunity and also on the founder's ability to navigate uncertainty. And boy, oh boy, do we need that right now. You evolve their thinking and you build companies that endure beyond early momentum. At FFVC, you work closely with founders from the earliest stages, helping translate ambition into clearer decision making. Keen to talk to you about that as well. I'm noticing there's a lot of freeze at the moment when it comes to decision making, just with everything happening at the moment. Structured execution and resilient growth paths. Your lens is grounded in the pattern recognition developed over time, knowing when to lean in, when to step back, and how to support founders through the realities of building, and not just the theory. Your approach, though, reflects a quieter truth in venture that clarity compounds faster than speed when pressure hits. And when I had you book in for the pod and I said to you, what's something that you would like to share? And you and I were chatting the other week when we had our quick catch up, and you said advice for someone in their is, and hand it over to you to tell us
Okay.
a bit
Well,
about.
thank you for having me on your podcast. I'm really excited about the opportunity here. So,
You.
I got married very young. I got married at 22. My wife was
Wow.
20. We started having children at 25, and we're blessed with 5 children. Biologically, we've kind of adopted a 6th child. And, you know, if you think about having children early and compounding, we're now blessed with about 16 grandchildren.
Whoa.
And it's really interesting because I've got a lot of peers who might have 1 grandchild or not 1 or 3 or 4. And it's just kind of interesting because I think when you get to my age, it's funny, in my 20s, I said when you get to my grandfather's age, but I've now kind of reached that. When you get to my age, no one says they wish they had less kids. And what happens is, I think your 20s and your 30s are periods for compounding your skills,
Mm.
your Rolodex or contacts, people you know, money, because if you're going to have multiple careers, why not try and get the money earlier in life? It gives you more options. And then family. And I think a lot of people
Excuse me.
kind of get sexually active and then they play the field. And then eventually they find someone and they live together. And then eventually they get engaged and they have a long engagement. And then they get married eventually. And then they say, let's have a couple years married before we have kids. And they try and have kids and they're infertile
Mm.
or they're running out the clock. And if that's what you want to do, that's fine. But I think it's the way people drift. And what I encourage people to do, because I think people understand about compounding skills and Rolodex and money, but family is fascinating. Yeah, I encourage people just to make a decision because if you have a bunch of kids having children is a tough 20 years,
Mm.
right? Where do you want that? Do you want that in your 40s and 50s, your 30s and 40s, your 20s and 30s, where you've got more time and energy, yeah, and the like. And so I think people who put career first ultimately can look back and say, I wish I'd done it differently. And so my point is, when you're in your early 20s, this is something you need to make a proactive decision about. And if you want to wait, that's fine. Maybe you don't want to have children. That's fine.
What if you can't?
Then you may be fine with that. You may not.
Yeah.
Infertility is a real problem for sure. Medical issues can definitely intervene. But the question is, do you want to have agency in the decision or do you want the decision to be made by itself? And I think a lot of people don't think about it.
No.
And then they say, oh, children are awfully expensive. And I'm like, yeah, no. Poor people have a lot of kids. So, it's not a function of money. Now, I know when I talk to people in their 20s and 30s, they're like, it is very expensive, etc. But they spend so much more money and they spend it differently than I did when I was at that age. I didn't have people chauffeuring me around. I didn't expect food to be delivered to my house. I didn't go out and get a frappuccino, whatever, once or twice a day. All these things add up. And house expectations, houses were, 2/3 to half a size. You had a phone that was wired in the wall. You didn't walk around with, a 1,000, 2,000
2000.
dollar computer in your pocket. You maybe had one television. You didn't have a television in every room. So I'm just saying it's an affordability decision-making process. So I look at it and I go, just make the decision early in life as to where you want to be 30 and 40 years from now. Everyone talks about their 2-year plan, their 5-year plan. Have a 40-year plan. And, we've talked to our kids about this. And I was talking to one of them, and he said, we're talking about various metrics in life. How do you measure success in life? And we came to the conclusion that one life success metric you could use is the sum of your age and all your descendants' ages by the time you pass away.
Mm.
And, if you have one child and they maybe have one child, you can add that together, and when you pass away, whatever age.
Yeah.
But if you have a lot of children, your children have a lot of children, the number is exponentially larger. It's just fascinating as a concept to think about different ways to measure success. I've made a ton of investments. I've made a lot of money on some. I've lost money on others. I can assure you on my deathbed, I'm not going to say I wish I put more money there and less money there. It's going to be about family.
Yeah,
And
I
I
love that.
think
Thanks, sweet, John.
so that I think that's really what we were talking about. It's a bit of a hobby horse for me. You get me talking about it and I go on and on. But
I
but
like it.
I just fundamentally I'm saying just think about it and what you want in life. The other thing is, honestly, I see people who don't get married tend to get more like themselves. And people who do get married, the rougher edges get smoothed off because they have to think about someone else. And then when they have children, they have to think about their children. And it's a very natural part of development as a human being to have dependence and to not just base your life around your consumption and what you do as an individual. So,
Mm.
yeah, let's move on to VC stuff. But yeah,
And I like just that point that you made because I spoke to somebody else on the pod the other week and he was talking about, there's no such thing as self-actualization. It's collective collective actualization in terms of like, you were just pointing out that point around, oneself. And yet it's like you're talking about it's a collective of family. And there was a few other things that were interesting for me. Someone who has faced infertility and did the whole IVF journey myself. And, did I leave it too late? Explored it later in life. As a female in particular, for me, career and the idea of family at the same time, it
It's
wasn't really
it's
it wasn't really a
yeah,
choice because, if I said when it had said in the career I was in that I wanted to have children, then there goes my career. It was that sort of, industry.
it's very tough for a woman.
Yeah.
It's tough for
Mm.
men as well. And,
Yeah.
I got a bunch of kids and they have a bunch of kids and
Yeah.
I see all of
Yeah.
that. It's very tough. It's very tough for a woman and particularly in certain careers and the demanding dynamics of it. All I'm saying is a lot of people drift. They don't even think about this. And so I'm just saying, think about it and think about your life and how you want it structured. And it's really tough. Some people don't have a choice, even if they want to, as you talked about.
Yeah. But John, I agree with you in terms of explore it early. And that's the advice I give younger, entrepreneurs, younger business people. I always say, especially women, I say, go get yourself checked. If you actually are thinking of having family, do it now. Do it in your 20s. Don't leave it to as long as I left it in terms of, could things have worked out differently? I don't know from a science perspective, biological perspective, like there's some challenges for me. However, I agree with you. Like go and if that is what you want to do, look into it early and do it earlier. So that would be the advice to all the listeners. And so I concur with you on that. And, and I loved your call out around being on your deathbed. And it's not about all the wealth and the money. It's around, well, what's filled your cup, and it's your family. And so I think that's really beautiful. And of course, reshaping success and life metrics. We don't think enough about the life metrics when it comes to success. We think about all the financial metrics of success and the external elements of success versus what actually does give us pure joy.
Right.
It's,
Well, to be clear, as I say to my wife, the larger the family, the larger the surface area.
yeah,
So yes, definitely some joy, but there can be some misery and some awful things right? It's a bigger surface area for
yeah,
stuff to happen. So there is that, it gives in my book, it gives more texture to life. And you just have to, some parents say, I can only be as happy as my most unhappy kid or my most unhappy grandkid. And I say to my wife, yeah, no. Go, the permutations are too big. You got to have a little insulation here. But yes, it gives a lot more surface area for bad things to happen as well. And, your job is then to mentor and to help, but not fully take into your heart all of the heartache or
absolutely.
you won't, or
Absolutely.
you won't be around.
Yeah. Okay, so let's move into to VC. So you, like I
Okay.
said, a VC, early stage venture firm, you invest globally across physical AI and early stage technologies. Tell us a little bit about, well, explain to us, can you please explain in the most simplest form about physical AI and what you mean by early stage technologies, please?
Okay. So physical AI is a buzzword. It literally means AI applied to things other than just purely software. And so, drones, robotics fall within that. Our seventh fund is focused on the energy and manufacturing sectors. So the ability to apply AI into those sectors we think is fascinating. And a lot of it is around physical AI. Now, some of it might be 3D printing objects with AI designs that you wouldn't normally think of, and 3D gives you the ability to print them. It could be around using AI to measure maintenance and the like so that you can intervene before things break down. It's obviously robotics. obviously drones and their applications, but it can also apply to material sciences. So we think there's a whole series of areas where you can bring a lot more efficiency, a lot more deflation. Technology is fundamentally deflationary into these processes, whilst we have a huge demand for energy in the US and energy efficiency, and we have a huge demand to bring manufacturing back to the US with closer supply chain lines and everything that means. And what you don't do is you don't pick up your factories from Asia and drop them in the US. You try to do it using new technologies more efficiently.
Mm.
So that that's the core piece. And then, we're early stage technology investors. So we tend to invest at the earliest stage of companies, early revenue, pre-revenue, and really help them grow large. About 50% of our pre-seed funded companies get to a Series B. The data is on average about 10%. So we're running about 5 times the average. 13% of our companies have got to 100 million revenue run rate. That I don't know what the industry average is, but it's probably sub 1%.
Mm.
So we have high survivorship ratios in what we do. We're active
Why is that,
VC.
John? Why is high, like, tell us a little bit, like, what do you think, like, about in terms of high survivorship?
If I mean, there's a whole series of things we do, and we fine tuned it over the years. We started 18 years ago in 2008. So there's a whole series of things we do. If I knew exactly which ones worked, I'd just do that and stop doing the others. We tend to lead rounds. We tend to sit on boards. We feel we have some expertise around how to grow a team from 4 to 50 on business model, finance, branding, pricing, positioning. But we're not expertise in the technologies our companies invest in. That's what we expect the teams to be. We just
Yeah.
help give a business sense to what they're doing and help them take this idea and build a defensible business model around it.
Yeah, it's a great story in terms of just that, like what you were saying, they're the experts in what they're experts in when it comes to tech, and then you wrap around the business model, if you like. And I did my ears pricked up because my background is advertising and communication, and you talked about branding, and you're probably one of the first VCs I've spoken to who actually brings branding into your business model play. And it's something that I've really noticed in terms of, you can have your business strategy, your financials, like from a team culture, etc. And you go to market. And yet there seems like there's this big gap when it comes to the story, the brand piece. That I'm like, where is that? Hang on a second. Like, you need to have that as part of your total business application,
It's
if you
it's
like.
it's it,
Yeah, it's really important because I also think that, from a founder entrepreneur perspective, and I'd be interested to get your thoughts on this, and especially when it comes to early stage tech and physical AI, how much of their lived experience has formed the business or the product that they have created.
well, a lot. I mean, you generally want to invest in a domain expert, so you want them to have some reason why they're an expert in that given domain that you're backing them. So I think it's often formed there.
Yeah.
They I use this term that almost every successful entrepreneur I know is delusionally optimistic. They have a vision and they believe millions of people will adopt that vision, whether it's an enterprise or consumer. And it's unreasonable people. I think Steve Jobs said, the reasonable people don't get anything done in the world. But I think there's an element to that. You have to have this path. Now, doesn't mean that everyone who's delusionally optimistic is a good entrepreneur, but I think it's a core aspect. They need to be a storyteller. They need to be a salesperson. They need to bring everyone along with their vision. But ultimately, their vision is the world is like this. It should be like that. We can take it from here to there, and this is how I want to do it. And
Mm.
that's pretty much every business.
Would you say you're delusionally optimistic?
Yeah, probably. I think you have to be because I mean, people ask, how do you do venture capital? I say, well, you find these people and you give them millions of dollars and they give you pieces of paper. And then you go in another room and pray for 10 years. And when you come out, you hope you can give them the pieces of paper back and they'll give you multiple millions of dollars back.
Mm, mm.
So, yeah, I mean, I actually am surprised there isn't more fraud in this business because I
What's that?
think, well, because literally you're giving people millions of dollars and a lot of trust and go and do this. And, we probably invest in approaching 200 companies and
But you play.
maybe one or two were borderline.
Mhm.
We've had no outright fraud, but generally, in the US, this is a high trust business and it brings people who work in a high trust way. And I think it's a core aspect of the US psyche that makes it work. I think taking startups and building them into big businesses is incredibly fragile. And I think the reason why it's so successful in the US is this high trust environment, the culture, the acceptance of failure, the willingness of businesses to buy from, 3-person startups. There's a prevailing attitude in part of Europe that I want to buy from you if 10 of my competitors are using you because then it's low risk for me.
Mm, mm,
And I think in the US, the attitude is I want to buy from you ahead of 10 of my
mm,
competitors using you
mm.
because I want the advantage. And so I think it's a whole different risk profile across the whole ecosystem that enables it. I think there's an underlying taxation system that's supportive of it. And you have to understand that most VCs never make that much money.
Mm.
I think over half of VCs don't see carry as a stat I've heard. Carry is profits on net successful exits.
Is that because
And so
John, is
there's a
that
lot of people doing this on the hope that they can find the companies that can grow rapidly,
because
make a lot of money for the founders and make a lot of money for themselves.
yeah. But you, John, is that though, you talked before around the fact that you wrap yourselves around the businesses that, that you invest in and that you have them as, the experts and then you apply the business ecosystem around them, if you like. It's not like you go away and do, I mean, I'm sure you go away and think, gosh, I hope this, is successful in the next 10 years. I
No,
think
we're very engaged where the
that's what I was
businesses
about
want
to say,
to.
like,
Yeah.
isn't that the model, though? Like, in terms of you can't just walk away, you can't just step away, like, there's a need
Well,
to
I
be
mean, to
hand
be
in
clear,
glove.
some VCs do. They
Yeah.
invest in 300 companies in a fund. 10 of them do well, and that's great. And, they just don't spend any energy around the companies they invest in. We take a different approach. We're highly engaged. We put a ton of energy in the companies we work with. Statistically, a lot of companies don't work out. You're kind of like, I wish I hadn't not just put the capital, but the time and the energy and this and that. Um, but this is an outliers business. It's not a business of averages. And where the outliers work, they work great. And the question is, if you look, this is it's not a bell curve, it's a power law curve. And so if you take the power law curve, can you do work and tilt it a little less failures and a little bit more success? That's what you're trying to do. And we believe we can, but there are people who go, the median returns in VC are good. So I'll just invest in a lot of companies and the term is literally spray and pray. And then I hope some of them work out and I'll invest one and done. And I mean, that's an accelerator model. That's the YC model,
Mm, mm,
right? It's not a bad model from a return perspective. but it's a different model than what we do. Ours is a high engagement model. We think we can affect the outcome, but who knows? It's such a long lead time that I tell people I have no idea if
It's
I'm
like
good at
having a
this until I
family.
retire.
It's like a it's like a second family, really, isn't it? In terms of, like, you
Absolutely.
you talked about family at the start, and it's quite interesting, the connection here back
Yeah.
to family in terms
For,
of, like,
yeah.
I believe all successful, businesses and relationships come from that ability to be high touch, high engagement. I think you absolutely need it. Like, you can't just do a deal and then walk away and expect, to get the results. And
Well, yeah, but you may do,
I
right?
know,
I
I
mean,
just don't think it's the right way.
the angel investor model is predicated predominantly about cutting small checks into
Mm,
companies you really like. And then, 10 years later, you get an email and says, where do we send you the money? So,
yeah,
and I don't want to invalidate that approach. It's just not what we do.
yeah.
And, for us, we really want to invest in people we want to spend time with. And we tell people to reference us. Let's make sure you want to spend the next decade talking with us. Because if you don't, and we don't, let's not do it. It won't be fun. Life's short. You should be doing fun things.
Tell us a little bit about that. I got a couple of final questions for you in terms of what does constitutes a, let's call it, successful relationship, in terms of, when you talk about culture and, from a business going from early stage to series B, for example. What's required in terms of, there's probably two questions in that, isn't there? From what's required from, like, the founder, and then what's required in terms of the culture within the business as it's scaling.
Well, we like to invest in teams that listen. Not necessarily have to listen to us, you know, but we want to listen to the marketplace. We don't want teams that build and go, I know what the market needs, and keep building and building and trying to perfect the lily, without going and testing the market. So we like people who listen and take feedback, who spend time with their customers and get feedback. And, whether it's us or other investors, leverage that resource. Most companies fail, right? You're trying to be in the top 1% of companies. You've got smart people around you. You're going to leverage them. And I got to tell you, I have a lot of ideas. They're not always right, but sometimes they are. And and that's helped move companies forward that we've invested in. So, in the first meeting, one of the best indicators is where us and the founders are sort of completing each other's sentences. As they lay out the vision, you're kind of like really complimenting.
Yeah,
And we often get feedback on those meetings that we grok the business. We understand the business faster than other investors and making suggestions and recommendations. And in fact, as like any other VC, 99+% of the companies we see, we end up not investing in. But I can't tell you how many times we've not invested in a company and we've spoken to a founder subsequently and they said, we changed the business based on our conversation with you.
that's great.
Yeah. So I think it's really getting a deep level of understanding and a harmony from that perspective. And then really, we tell them to reference us deeply, and we reference them deeply, just making sure that this is going to be a good conversation for the next 10 years.
Yeah, I think that's so important, isn't it? In terms of just that, like, it comes back to relationships. One last question for you before I'm going to get some more advice. Women in women founders, women seeking funding. What are you seeing in terms of within the VC ecosystem? Is that something that you're noticing with?
So I'm a believer in a quality of access, not a quality of outcome. So we are blind with regard to every company we look at. I think we probably over-index on gender and minority and stuff, but we honestly don't measure it. We think to measure it is peculiar because either you're objectifying people or you're asking them, and we think that's just weird. There's a new California law that got delayed that basically required us to send a form to every founder and ask them about their sexual orientation
Really?
and their their gender and their race, etc. And I said, if we have to do this because it was California law and we would have to, I don't want to actually look at the results because I just think it's weird that you have this relationship and then you have to go so deep
Mm,
in that. Some of these questions the companies couldn't ask the person because it would have been an HR violation. But
mm.
we as investors legally were required. But in any case, so the answer is my sense is that when we get someone who is obviously in a minority category, we listen a little harder,
Yeah, okay. That's a good response.
but we don't bias the outcome. I think we are over indexing where we've invested. I think the founder life is really hard.
Yeah,
I think it's really hard.
brutal at times.
And when it's hard on our female founders, I feel worse than when it's hard on our male founders. Maybe that's sexist. I don't know. But
You,
it's,
John, to empathy.
well, right.
Just speaking to a founder before. No, I know.
Yeah. And so what I suspect is that the reason why it tends to be more male is just because I think a lot of women are like, that's a sucker's game and I don't want to do it. We don't, I mean, I will tell you of the incoming we see, it's not half female. It's
No,
not
I know.
like it's 50-50 coming
That's why
in
I asked the
and
question.
it's
Yeah,
95-5 coming out.
yeah, that's why I asked the question.
Yeah.
I'm a delusional optimist and I'm a founder and I'm
It's
here to
tough.
I'm here to bring more of the female energy into play. So we have a combination of the male and the female energy because I think we need both. And this isn't about bias or pushing more women. I just think that business is better when we've got a combination and the interconnection of energy and flow that comes together. John, 1 minute left. What would be your final word of wisdom, piece of advice you would like to leave?
There's never been a better time to start a company. The tool set out there is ridiculous.
Yeah, it's wild.
Even for me, I have a legal, health, tax, whatever question in my life. I would go to an expert first. I can now go to an LLM first and get a cross-disciplinary answer that's as good as the experts.
Yeah,
I know doctors are pushing back. They hate it. And I use doctors as an example because we all think about our own health from time to time. But solving legal and tax issues, so I can go in with a question that's meaningful, I find or examine all the things that I think you could do, but it's all nonsense. And to be able to do that with an LLM, as opposed someone's going to charge me, $500 to $2,000 an hour, is phenomenal. And that's just an example. But you're starting a company, your ability to spin up code, your ability to get expertise to augment what you're doing, your ability to find out what your competitors are doing, your ability to dynamically monitor key things, all at the cost of tokens, is amazing.
I
And
agree.
so there's a explosion of new companies being formed here. I think there's huge opportunities, as I said, in energy and manufacturing, but I think across the whole sector, I think we're a time of acceleration. And it is so difficult to predict the world 5 years from now, other than it's going to be a lot cheaper and hopefully more fun.
Yeah, I agree. I love that, John. What a great conversation. Thank you so much. We've really have danced around various conversations, and I feel very, very uplifted for my early Tuesday morning and your Monday evening. We can find you at John Frankel on X. I will also share in the show notes to go to your website, which is ffvc.com. I think I've got that right. And also then
Correct.
your LinkedIn profile. If
Yeah.
anyone, any of the listeners want any advice on, and they're in their 20s, or if you're looking for any, VC discussions or, conversations, connect with John. John, thank you so much for your time. I really have enjoyed this conversation this morning.
Not at all. Thank you. And also, if you go to the footer of our website, we have a newsletter. And if you want to
Amazing.
join our community, we update it twice a month. And we have about 25,000 people in our community and love to have more people join.
I'll join myself. I'll join it after this later today when I'm out of my meetings.
B, thank you very much for your time. This has been a lot of fun.
Yeah, thank you. You enjoy your evening. Thanks, John.
Cheers.